Bitcoin is holding just under $119,000. But don't let that stability fool you. Over $66 billion has been wiped from the cryptocurrency market in the last 24 hours alone. Almost every major altcoin is bleeding, with 98 of the top 100 coins down an average of 5.5%. But while panic is setting in for some traders, Ethereum is showing serious strength, holding firm at $3,854 with exchange-traded fund inflows now topping $5.2 billion across 17 straight days. That's not normal behavior for a market in retreat. Something bigger might be unfolding. Let's unpack this deeper. The $66 billion wipeout isn't random chaos. It's tied to macroeconomic jitters ahead of tomorrow's Federal Open Market Committee meeting, where rate decisions could swing sentiment wildly, and a revival of dormant Bitcoin whales stirring fears of profit-taking. These large holders, some inactive for years, are moving massive amounts, creating ripples that cascade into altcoin sell-offs. Yet, amid the red, Ethereum's exchange-traded fund inflows tell a story of institutional conviction, with funds like BlackRock's iShares Ethereum Trust pulling in hundreds of millions daily, suggesting smart money is betting on Ethereum as a hedge against broader market dips. This divergence, Bitcoin flatlining while Ethereum builds quietly, could be the early sign of an altcoin rotation, or even a broader recovery if the Federal Open Market Committee delivers dovish signals. Before we go any further, if you're watching on YouTube, TikTok, or Spotify, hit like and comment your thoughts on today's update. Each week, we'll quietly choose one comment to receive $30 worth of crypto in your chosen coin. We'll reply to your comment and announce the winner on our social platforms. Your engagement keeps this channel alive, and we love hearing your takes, whether you're calling for a Bitcoin breakout or warning of deeper corrections. Market capitalization is technically only down 0.02% on the day, sitting at $3.91 trillion. But that number is deceptive. A surge in trading volume, up over 6.2% to $174.21 billion, tells the real story. Big wallets are moving, whales are reshuffling. The fear and greed index has fallen back to 64 after multiple days in greed territory. The vibe has shifted. We're teetering between caution and confidence. There's tension in the charts and in the sentiment feeds, and you can feel it everywhere. Drilling into the volume surge. It's not just retail noise. This is institutional-grade activity, with on-chain data showing over $1 billion in transfers to exchanges like Binance and Coinbase in the last day alone. That could mean selling pressure building, but it also includes strategic repositioning, like whales accumulating during dips. The fear and greed drop from 72 yesterday highlights how quickly sentiment flips. Factors like geopolitical tensions, think United States and China trade talks heating up, and upcoming jobs data are amplifying the uncertainty. If you're trading, this is the time to watch liquidation levels. Over $428 million wiped out in the last 24 hours, mostly shorts on Bitcoin and Ethereum, which paradoxically could fuel a rebound if buyers step in. To put this in perspective, liquidations like these often precede short squeezes, where forced buying pushes prices higher, as we've seen in past cycles like the 2021 bull run when similar events sparked 20 to 30% rallies in days. Bitcoin dominance is locked at 60.4%, a reminder that even during a pullback, Bitcoin holds court. It's currently priced at $118,841, up just 0.09%, with a market cap of $2.36 trillion. Ethereum's resilience is more than just price. Sharplink just added 77,000 Ethereum, nearly $300 million. And Bitmine has over $2 billion in Ethereum now, with a $1 billion buyback plan in motion. Ethzilla, a brand new decentralized finance protocol, has launched with $425 million, and PayPal has now officially activated cryptocurrency payments for over 100 coins with United States merchants. Fees slashed by 90%. Real adoption, not theory. Live. Let's expand on Ethereum's treasury race. Sharplink's acquisition pushes their total holdings past $1.6 billion, focusing on yield-generating strategies like staking and decentralized finance lending, which could yield 5 to 8% annually in a stable environment. Bitmine's buyback isn't just offensive, It's aggressive, signaling they view Ethereum as undervalued, relative to its utility in decentralized finance and non-fungible tokens. Ethzilla's launch, backed by venture firms like Andreessen Horowitz, introduces innovative treasury management tools, allowing corporates to automate Ethereum allocations for maximum efficiency. PayPal's move is a game changer. By integrating over 100 coins, they're not only reducing fees but also bridging fiat to crypto rails, potentially onboarding millions of users who were hesitant due to complexity. This could drive daily transaction volumes up 20 to 30% in the coming months, solidifying Ethereum's role as the backbone of Web3 payments. Imagine the impact: small businesses accepting Bitcoin or Ethereum seamlessly, cutting out middlemen, and boosting global commerce in ways we've only dreamed about until now. Recent reports indicate that Ethereum's price has dipped slightly to around $3,795.63, reflecting a 1.43% decline. But the overall sentiment remains positive due to ongoing exchange-traded fund inflows and market resilience. Altcoins aren't holding up nearly as well. Solana's down 3.78% to $184.18. Binance Coin is at $820.43, cooling off nearly 3% after an all-time high last week. Dogecoin is down over 3%, Chainlink's dropped to $18.29, and Avalanche took a steep 7% hit, now at $25.14. Cardano, Stellar, Hedera, all red. TRON is the outlier, up 5.07% thanks to United States Dollar Tether integrations and new MoonPay traction. XRP is actually gaining, holding at $3.16, up 1.24% on the day, as whales accumulate below the radar. Breaking this down further, Solana's dip ties to network congestion fears resurfacing after a spike in meme coin activity overloaded validators, dropping its total value locked by 4% overnight. Binance Coin's cooldown post all-time high is classic profit-taking, but its treasury burns, reducing supply by 2% quarterly. Keep long-term bulls optimistic, especially with Binance's ecosystem expanding into new decentralized finance products. Dogecoin's slide mirrors broader meme coin fatigue, yet exchange-traded fund rumors persist with odds at 80% for approval by the fourth quarter, potentially igniting a hype-driven surge similar to 2021's 10x run. Chainlink's drop comes despite rising Oracle demand in decentralized finance. It's undervalued at current levels, with partnerships like Swift integration potentially sparking a 20% rebound as more real-world data feeds go live. Avalanche's 7% hit stems from real-world asset tokenization delays amid regulatory scrutiny, but its $250 million fund for real-world assets could flip the narrative, bringing tokenized real estate and bonds on-chain for everyday investors. Cardano's red streak, down 2.32% to 0.8011, ignores upcoming interoperability upgrades that aim to connect with Ethereum and Solana, enhancing cross-chain functionality. Stellar, down 0.98% to $0.4280, benefits from cross-border payment pilots with banks in Africa and Asia, positioning it as a low-cost alternative to traditional wires. Hedera, down 2.13% to 0.2729, holds steady on enterprise adoption, with recent governance enhancements streamlining decision-making for large-scale networks. TRON's surge is fueled by United States Dollar Tether dominance, hosting $80 billion in stablecoins, and MoonPay's fiat on-ramps easing entry for new users, making it a go-to for high-volume transactions. XRP's whale accumulation, with over 50 million tokens moved to cold storage, hints at institutional bets on regulatory clarity post-securities and exchange commission settlement talks, possibly paving the way for bank integrations worldwide. Additionally, Solana-linked exchange-traded funds have attracted $100 million in assets in just 12 trading days, positioning Solana for a potential rise to $300 this year. There's fresh action from stablecoins as well. United States Dollar Tether and United States Dollar Coin are both holding tightly at peg, 0.9999 and 0.9998 respectively. But their underlying activity tells you they're being used heavily. Movement between wallets, spikes in transaction volume. This is utility in motion, not passive holding. United States Dollar Tether's $120 billion in treasuries ranks it among top holders globally, and today's 5,800 Bitcoin transfer to 21 ahead of its listing underscores how stablecoins are bridging traditional finance. United States Dollar Coin's Coinbase expansion in Latin America could cut remittance costs by 50%, driving adoption in emerging markets where billions in fees are lost annually to legacy systems. Stablecoins like these are crucial in maintaining liquidity during volatile periods, and their stability amid the market dip highlights their role as a safe haven within the ecosystem. The regulatory news today is no less dramatic. The United States House is pushing forward with an anti-central bank digital currency bill that could effectively ban the Federal Reserve from launching a central bank digital currency. This isn't symbolic, it's direct legislative momentum. Meanwhile, the European Central Bank is warning that stablecoins like United States Dollar Coin could undermine euro stability. That sets up a global confrontation between private stablecoin issuers and sovereign money. India, meanwhile, stays locked in place. The Finance Ministry confirmed no changes to their harsh 30% cryptocurrency tax, and still no exchange-traded fund approvals. That's putting serious pressure on local growth and local builders. Expanding on the United States bill. Sponsored by bipartisan lawmakers, it cites privacy risks and surveillance potential of central bank digital currencies, potentially locking in decentralized alternatives like Bitcoin and Ethereum as the future of digital money. If passed, it could unleash $9 trillion from retirement funds into crypto, creating a flood of capital that dwarfs current exchange-traded fund inflows. The European Central Bank's warning highlights how United States-backed stablecoins hold 90% of European Union volume, threatening monetary policy. Expect calls for a digital euro rollout by 2026, which might fragment the market, but also validate stablecoins' role. India's stance stifles innovation. Without tax relief or exchange-traded funds, developers are migrating to Singapore, capping market cap growth at 10% annually versus 30% globally, and leaving billions in potential economic value on the table for a country with one of the world's largest young populations eager for tech adoption. Technically, Bitcoin is right in a volatility coil. Bollinger Bands are tightening, the tightest since February, historically preceding moves of 10 to 15% in either direction. If Bitcoin clears $120,500 with volume, the next target zone stretches to $139,000 to $142,000, based on historical breakout zones and market value to realized value ratios. Let's break down the math. Current market value to realized value is 1.15, market value divided by realized value. Historical profit-taking hits at 1.35, implying 17% upside. 118,841 multiplied by 1.17 equals roughly $139,044. Steps. 1. Fetch on-chain realized cap, around $600 billion. 2. Divide market cap by it for market value to realized value. 3. Project to 1.35 for target. Ethereum has held $3,700 all week. Exchange-traded fund inflows combined with a neutral relative strength index of 55 suggest upside to $4,000 this week, potentially higher. Fibonacci extensions from the 3,700 to 3,900 range place targets up to $4,239 in a bullish breakout. Steps. 1. Identify range $200. 2. Apply 1.618 Fibonacci level. $3,854 plus $200 times 1.618 equals roughly $4,177. 3. Adjust for inflows. 5.2 billion. Adding 10% demand. 3,854 times 1.1 equals $4,239. XRP sits at $3.16. Its relative strength index hovering around 78. It's overbought in the short term but gaining support, with a target near $3.50 if inflows continue. A possible pullback to $2.90 support exists, but whale buys could override that, targeting $3.50 via Fibonacci 1.618 extension from recent lows. For Binance Coin at $820.43, post all-time high correction suggests a 5% burn impact. $820.43 times 1.05 equals $861.45. Solana, at $184.18, could break 200 with ecosystem momentum, using exponential moving average crossover. Above 50-day exponential moving average $180, target 200 days, 200 plus 20% equals $240. Analysts are bullish on Ethereum, forecasting $13,000 by the fourth quarter of 2025, citing strong breakouts and exchange-traded fund inflows. Beyond price levels, institutions are moving with precision. Marathon Digital just raised $950 million to expand their Bitcoin and Ethereum exposure. ARK Invest added $18.6 million more to their Bitmine holdings. Metaplanet purchased another 780 Bitcoin, adding to their 17,132 total, mimicking MicroStrategy's playbook for corporate adoption. Coinbase is rapidly building out United States dollar coin infrastructure across Latin America and Asia, accelerating settlement layers beyond traditional rails. Marathon's raise isn't small change. It's part of a trend where mining firms, holding $6 billion in Bitcoin already, are doubling down on treasuries to weather volatility. ARK's Bitmine investment focuses on Ethereum mining efficiency, potentially boosting yields in a post-merge world. Coinbase's push with United States Dollar Coin aims at underserved regions, where remittances total $150 billion annually, positioning crypto as a faster, cheaper alternative, potentially cutting costs by 50%. Real-time sentiment in the crypto community is jittery but not defeated. Discussions swirl around India's stubborn regulatory stance as a long-term risk, Ethereum giveaways tied to its 10th anniversary boosting morale, and new fair launch models appealing to retail investors hungry for momentum. Threads also dive into whale movements, exchange-traded fund inflow timing, and speculation around Ethereum OS experiments, which could reduce gas fees by 90% and scale to millions of transactions per second. These conversations reflect a community that's cautious yet engaged, dissecting market moves with tools like Arkham Intelligence for whale tracking. Looking deeper, altcoins like Chainlink, Cardano, and Avalanche might be down, but developer activity remains high. Chainlink's Oracle networks are critical for feeding real-time data to smart contracts, with daily queries up 15% this week, underscoring its utility, even in bearish phases. Cardano's upgrades include new smart contract languages, attracting developers from Ethereum for lower costs. Avalanche's traction in real-world assets involves tokenizing $1 billion in funds, from bonds to art, creating liquid markets for illiquid assets. These projects are laying groundwork that could outpace price recovery, positioning them for explosive growth when sentiment flips. Zooming out, this market is displaying one of the most telling patterns we've seen since the fourth quarter of 2021, a correction that's not triggering long-term exits. The big money is staying in. The long-term narratives, decentralized finance, tokenized real-world assets, exchange-traded fund adoption, payment rail evolution, are alive and building. Even as prices wobble, infrastructure grows. Decentralized finance total value locked hit $153 billion recently, driven by Ethereum and Solana protocols offering yields far above traditional savings. Tokenized real-world assets could unlock $10 trillion in value by 2030, turning everything from real estate to intellectual property into tradable tokens. Exchange-traded funds have already brought in mainstream investors, with Bitcoin and Ethereum funds holding billions under management. Payment rails like PayPal's expansion could mainstream crypto for e-commerce, reducing global transaction friction. The cryptocurrency market's total value locked in decentralized finance has reached a 3-year high, with Ethereum dominating 60% of that share, indicating robust underlying activity despite surface-level volatility. Tomorrow's Federal Open Market Committee decision could be the catalyst. If rates stay flat, expect Bitcoin to break $120,000, potentially targeting $130,000 within weeks as risk on sentiment returns. If there's another surprise hike, short-term volatility could spike, but don't expect long-term players to flinch. This environment rewards patience, research, and conviction. The Federal Open Market Committee's potential for rate cuts, odds at 60% per futures markets, would lower borrowing costs, encouraging risk-on assets like crypto, while a hike might delay the bull but not derail it, given strong fundamentals like institutional adoption and infrastructure growth. Let's dive deeper into the broader implications of today's market dynamics. The $66 billion market cap drop, while significant, is a mere blip in the context of the sector's long-term trajectory. Since the 2021 bull run, the cryptocurrency market has grown from $2 trillion to nearly $4 trillion at its peak earlier this month, driven by institutional inflows, regulatory clarity in key jurisdictions, and technological advancements. The current correction aligns with historical patterns. Think the 30% pullbacks in 2017 and 2021 that often precede major rallies. On-chain metrics support this. Bitcoin's short-term holder market value to realized value at 1.15 suggests 20 to 25% upside before profit-taking kicks in, while Ethereum's network activity, with over 1 million daily transactions, underscores its resilience. The Fear and Greed Index at 64 indicates a market not yet overextended, leaving room for growth if external catalysts align. The institutional landscape is particularly telling. Beyond Marathon Digital, ARK Invest, and Metaplanet, other players are quietly positioning. BlackRock's whale status, with billions in Bitcoin and Ethereum exposure, signals a shift where traditional finance views crypto as a core asset class. PayPal's expansion to 100-plus coins isn't just a headline. It's a structural change, enabling millions of merchants to adopt crypto payments without the technical hurdles of wallet management. This could spark a virtuous cycle. Increased transaction volume drives network effects, attracting more users, which in turn boosts prices. Analyst projections suggest PayPal's move could add $500 billion to crypto market cap by 2027 if adoption scales as expected. Regulatory developments deserve closer scrutiny. The United States anti-central bank digital currency bill is a bold move, reflecting bipartisan skepticism of centralized digital currencies. By prioritizing privacy and decentralization, it aligns with crypto's ethos and could accelerate mainstream adoption. However, it also risks delays in broader digital currency frameworks, potentially creating uncertainty for stablecoin issuers like United States Dollar Tether and United States Dollar Coin. The European Central Bank's push for a digital euro highlights a global tug-of-war. Sovereigns want control, but private stablecoins dominate due to their efficiency and accessibility. India's regulatory stagnation, meanwhile, is a cautionary tale. Without reform, it risks missing the crypto wave, ceding economic advantage to more agile markets like Singapore and the United Arab Emirates. Technically, the market is poised for a breakout. Bitcoin's Bollinger Bands contraction mirrors setups in 2020 and 2021, where volatility spikes led to 50% moves. Ethereum's neutral relative strength index and strong exchange-traded fund inflows suggest it's coiled for a push past $4,000, especially if Bitcoin clears $120,000. XRP's overbought relative strength index is tempered by whale accumulation, indicating strong hands are absorbing sell pressure. Altcoins like Solana, Binance Coin, and TRON show resilience in their ecosystems. Solana's decentralized finance growth, Binance's burns, and TRON's stablecoin dominance, positioning them for outperformance if market sentiment flips. Risks remain. The $686 million in token unlocks looming could pressure prices, especially for smaller cap altcoins. Hacks, like CoinDCX's recent $44 million loss, underscore security challenges. Macro factors, Federal Open Market Committee decisions, tariffs, geopolitical tensions, could amplify volatility. Yet these risks are outweighed by structural tailwinds, institutional adoption, technological innovation, and growing mainstream acceptance. Diversification and stop losses are key for navigating this phase, ensuring exposure to upside while mitigating downside. Looking ahead, the Federal Open Market Committee meeting is the immediate catalyst, but the bigger picture is clear. Crypto is no longer a niche asset. It's a global force, reshaping finance, commerce, and technology. The $66 billion dip is a speed bump, not a roadblock. Long-term players, whales, institutions, developers, are doubling down, building infrastructure that will outlast short-term noise. Whether you're a trader chasing breakouts or a hodler eyeing the next decade, this is a moment to stay sharp, stay informed, and stay in the game. And remember, if you haven't already, like and comment on YouTube, TikTok, or Spotify. One comment each week wins $30 in crypto. We'll reply directly and post the winner on our social platforms. Until next time, keep your entries tight, your narratives clear, and your eyes on the whales. We'll see you at the top.